guys. Welcome to podcast number 11. It's hard to believe we've already done 10 of these already. They go by so fast, 10 weeks long. But anyway, so welcome. Good morning. Today we're going to talk a little bit about DeFi. What is DeFi? Why we believe in it, where we're at with it, and how we as a crypto hedge fund, how we're going to be involved, use it, invest in it, and we make decisions. So, Graham, let's start with yourself. Why don't you explain to viewers what is DeFi? What is the space? Go ahead.
Yeah, sure. Thanks, Larry. So, DeFi stands for Decentralized Finance, and that is in contrast to centralized finance. So that's really the world that we're used to dealing with whenever we're dealing with financial services, be that through a bank or a broker or insurance company. That all falls under the category centralized finance, and that really refers to the fact that you have a centralized entity. So generally an entity with an address, a phone number, a CEO, all the almost real world characteristics of a business. And in many ways, this centralized entity is the entity that we trust, right? So just as an example, if I want to send you $100, Larry, I'm going to use the banking system, and then we both trust the bank that facilitates that transfer of $100 from me to you, and we're trusting that that bank doesn't disappear with my $100, and we're also trusting them that they give you the right amount. Obviously, after their oftentimes exorbitant fee, right? But one way or another, you're going to get most of the money that I want to send to you on the other side. So that is not a peer-to-peer transaction, because there's obviously the middleman that is facilitating that process, and we need to trust that middleman is going to do what they say they do. Okay, and that's why banks obviously spend so much on marketing and on building trust with their clientele, because that's really what their businesses are established on. So that's centralized finance. Now, decentralized finance is using this great technology that we all know and love, which is called the blockchain. And this really makes transactions that are traditionally done through the centralized finance space. We can now do that essentially peer-to-peer. And instead of trusting our bank with a bank manager and an address and bricks and mortar, we now trust the blockchain to facilitate these transfers between you and me. So, and in many ways, DeFi is looking to replace or at least replicate many of the traditional financial services that are currently available, be that the transfer of value, could be lending. We're seeing a bunch of decentralized exchanges, which facilitates trading on different digital assets. There's applications for insurance. As we discuss further, maybe we'll touch on NFTs and tokenization of real world assets. So there's a whole bunch of different applications for this new decentralized services, underpinned all by blockchain technology. But it's very much in its infancy, and it's still in the process of developing. But in my view, this is really where the growth and adoption in blockchain technology and digital assets is going to come from. So it's a sector of the industry that is very exciting, and it's an exciting place to be looking to invest and allocate funds at the same time.
So decentralized, to everyone watching, it really would mean that the things that we want to do, i.e. your example of transferring money, they can now be done faster, more efficient, and at a lower cost, because there's no other person or party involved. So what we're really trusting then is that this piece of technology, this blockchain piece of technology, is working so efficiently that it really doesn't need anybody. Can you help, I guess, the average viewer, is if there is a problem with when we do a bank or a Zelle, there's somebody we get to pick up the phone and call, right? And say, hey, this didn't go through, or I got a problem, or whatever. How does that wash itself out on decentralized? Because I don't think there is somebody I get to call, right?
Yeah. So let me maybe just break down the term decentralized and how that's applicable in this context. So, decentralized talks to multiple points of control, right, or input. So unlike our bank, let's say the bank is reckless and goes out of business and loses all the clients' money, that's a centralized point of failure. All right, so that is in contrast to blockchain technology, which is decentralized by virtue of many participants being involved in um, verifying a specific transaction. So that's what happens in blockchain is that you have a transaction. So if I want to send funds to you, I basically put up my digital hand and say I want to send funds from me to Larry. This is the details of the transaction, and then you have multiple participants that will verify that transaction, prove that it's correct, and if everything checks out, then that transaction is then executed onto the blockchain, which is an immutable ledger. Through the history of time, you can see everything's happened on there. If there's anything wrong with that transaction and there's a faulty transaction in some nature that's being verified incorrectly, then that participant is heavily penalized. So on Ethereum, for example, this is where the staking mechanism comes in. So if I want to be a verifier on the Ethereum blockchain, I have to stake my Ethereum to participate. And I put my Ethereum at risk because if I'm found to be a bad actor, I get slashed, all right? And I actually lose my Ethereum. So that's the risk that I'm putting up there. And it's designed in such a way that the economics are built to obviously disincentivize bad actors, right? And incentivize good actors and good behavior. So it's really that mechanism that controls this. And look, I mean, it's one thing for me to sit here and tell you about it, and you might think it's great, or you might think it's rubbish. But at the end of the day, you can go look at the Ethereum blockchain and all the transactions that have gone through there successfully and the experiences that you have on there. And they're by and large, very, very good, as is the Bitcoin blockchain, etc. So, there's the process or the value that offers is very clear in what it can achieve, and its track record is really, really sound.
If something breaks or doesn't work on Ethereum, and I'm comparing Ethereum to Solana, right? Like I've read a lot in lately that when Solana has an issue or something broke for a few minutes, they had a team that is actually always working on fixing it. What happens if there's an issue with a Bitcoin blockchain or an Ethereum blockchain? Like, who? Obviously, the world knows about it immediately, but what crew comes in and fixes this stuff?
Cool. Okay, so one thing to note is that blockchains become more powerful and more stable the more people that are using it. Okay, because of this, almost the incentives and disincentive structures are magnified and strengthened as there's more participants. So that's why, like, bad, or what do you call it? Things breaking are very rare on Bitcoin and Ethereum. Okay, but then you see on some of the smaller chains, like Solana, for example, has had some issues where there's been things that have gone wrong. So it comes down actually to the community, and there's a term called consensus, where basically the community sits together. Well, they don't sit together, but they they digitally sit together and vote on a specific topic. So if there were funds that were sent incorrectly from one address to another, there have been circumstances where they've actually rolled back that transaction and almost changed the history of the blockchain. But that's only done if the community has given their consensus on that type of action. So there are times for recourse in very extreme scenarios, but for a regular user, it's very important to be aware that if you send your funds to the wrong address or you lose your private key, those funds are gone, right? There's no 0800 number, or there's no telephone number or CEO that you can write a nice letter to. You're not going to get those funds back, right? So that's the responsibility that one needs to take on when you're dealing in this space, to take the right measures to obviously ensure that your transactions are correct and that your funds are securely stored and protected.
All right. Bilal, maybe you or Glenn want to take this next question. And we get questions from different people all the time. And this one is asking, what are the key factors to consider when evaluating different projects and opportunities?
B, you go.
Yeah, yeah, sure, great. So when looking at any crypto project, not just a DeFi project, what our team does is we look at GitHub to look at the code commits from the various projects. So, for example, if you're looking at a Solana project, our dev team is analyzing the GitHub repository to see what code commits are being done. So in a way, it's like if you're building a house in, let's say you're based in the US and you're building a house in Australia, or building in Australia, and you've got a quantity surveyor who is giving you feedback, every week or month, telling you, okay, the foundations have been laid and the wall has been laid, and now we're doing the painting or whatever. You can't see the building, but you've got a quantity surveyor who's confirming for you the stage of completion, and you then have some comfort as to that building being constructed. For us, we use GitHub as a quantity surveyor to tell us how far a project is along the line and what is being done in terms of the production of that particular product. We also track the users. We track the amount of transactions being done on a particular blockchain. And by looking at these metrics, we're able to determine whether or not that is a successful um, um, project. So those are some of the ideas, and then just some common sense basically is always good. Whatever
Before
we're
you,
looking at, what does that project actually do?
I was going to ask you before you go on to that next piece, could you just jump back to that GitHub? For those who are watching, what exactly does that do for who and us?
So GitHub is a repository of code where a person that knows how to read code can go and read the code of um, other coders who have exposed their code into the GitHub library, and they can read that to assess how far a particular project is in terms of its stage of completion.
Okay.
You would need to know how to read code in order to assess whether or not it is good or the stage of completion, and that's why we have an extensive um, and wide range of skills in the Spectrum Fund, from chartered accountants, chartered alternative investment analysts, engineers, software engineers, dev guys, coders. That actually, when we look at a project, we look at it holistically from each angle. And then
Okay.
the most important thing is the common sense angle, right? Which is what is this project? What does it actually do? What problem does it actually solve? And in most cases, what DeFi projects and most crypto projects do, the good ones, are that they solve a problem that traditional finance, which is the other term for centralized finance. So we're talking about DeFi, and the other side of the coin is CeFi or TradFi, in the crypto slang world, and so every project we look at, we want to understand in the traditional world how is this particular transaction or problem being solved, and does the crypto solution solve the problem faster, better, cheaper? If the crypto solution is not uh, um, an enhancement to the CFA or TradFi solution, then it means that that project probably has a bit more work to do before it can be successful. So a great example is FTX, the centralized exchange. It's a
Mhm.
crypto project, the FTX. FTX is a crypto project, but the FTX token, FTT token was a crypto token, but FTX was a centralized exchange that traded crypto. For example, now GMX is a decentralized exchange on which there is no uh, Sam Bankman-Fried like person behind that exchange that can commit a fraud. So by removing that need for a trusted intermediary, you also increase the ability for there to be more security.
So
Can I just add to that, if I may, Larry?
yeah,
So just to, we talk about security and the transition of how we do things. I'm definitely echoing. So the traditional or centralized system that we had its benefits in terms of having an intermediary or an institution to deal with, whether it be a clearinghouse, a bank, or whatever. But like anything in life, there's always a trade-off. So, we're going to achieve transparency, efficiency through blockchain. And the way we do things, or in other words, the transacting individual institutional will, develop a behavior that will eventually, eradicate some of the challenges that are faced in the decentralized setup. Because, the common problems are obviously hacking or a bug in the system, but those challenges have always been around in some way or form. But the biggest thing in this modern world, as compliance and anti-money laundering gains momentum, to really a painful degree from a financial institution point of view, blockchain is really going to be a significant change, and it's really going to be mainstream and the way of the future on all levels of transactions, no doubt.
you know what's interesting?
Yeah.
I don't think.
May I just add a bit on what Glenn said there? I mean, I really resonate with two important things he said there. So the first one is, the evolution of finance and how did we get to the CFI, TradFi organization. So it's, I don't know how many hundred years we want to go back, but humans used to barter. I give you sheep, you give me chicken. I give you gold, you give me bricks. And then it was more efficient to trade in coins, gold coins or whatever, and then paper, which was collateralized by gold in a vault somewhere. And we needed a centralized institution that we trusted to hold the gold and issue the paper, or to make the gold coins. Now, what the blockchain technology allows us to do is to have this ability to transact directly with each other, in effect bartering, but bartering these crypto tokens without the trusted intermediary in between, to have a trusted equalization of value between the two parties. So in a way, it's like having seashells that we all agree are the right seashells, that we can cut up into an 8 decimal place and transact between each other without somebody confirming, that these are the real seashells, because they can't be forged. So that's, if you just go back, the common sense reason for why this becomes important is quite clear. And then, yes, what Glenn said about AML and KYC is important. We want to protect the world from money launderers and terrorist finance and all of this. But the system that we currently are in actually just creates more hurdles for the good actors, and makes it more tedious, and creates admin, which I think isn't the right approach. Using blockchain technology, we could have a better approach. If you had your passport on an NFT which couldn't be forged, and you just do it once, and you never have to redo that passport. And then, I don't know how it works in the US, but in South Africa and Mauritius, every time you go to a hotel, you got to show them your passport. Every time you book a flight, you got to show them your passport. You got to show the bank your passport. You got to show the utilities company. You got to show the phone company. If you got 5 bank accounts, you got to show the same KYC to 5 different banks. And then it's actually, where's the leak going to come from when you share this information? Every time you're sharing the information, you're giving away the ability to steal your identity. So that's a TradFi and CFI problem just waiting to be fixed. and blockchain is a solution to that. And I think there's definitely a DeFi solution coming for that as well.
One of the things I've noticed, and maybe I'm wrong, but nobody's actually hacked Ethereum or hacked any of these other DeFi places to steal anything. Is that correct?
So Ethereum has never been hacked itself. And this is a good point, right? So you've got Ethereum, which is the most trusted blockchain, definitely in the DeFi space, right? But then you've got projects that will operate on top of Ethereum. Okay, so this is important. So the metaphor I use is to compare Ethereum to the internet, all right? And then on top of the internet, that's just the layer for websites and other services to operate on top of, right? So if you want to now, let's say, trade Ethereum to USDC, for example, right? You don't do that. You do that through Ethereum as your foundational layer, but generally you're going to go to Uniswap or SushiSwap or Curve, being one of the applications that operate using the Ethereum network, right? So Ethereum has never been hacked, but many of the projects that have built on top of Ethereum have been hacked, right? Because they need to put their own code together. Anyone can put together an application on Ethereum, obviously provided that you know how to code, that specific in that language, etc. And there's no quality checks. That's really down to those developers and what they do. And they could have whatever bugs in their system or whatever security flaws that can be exploited. So that's generally the case when you are reading about X wallet getting hacked, etc. Is often a bug in the code of that specific application, or it's bad wallet management. So someone has lost their keys or they've had their keys stolen for whatever reason. But Ethereum, Bitcoin, these are rock solid blockchains that have not been compromised in any significant manner during their existence. And this is part of the reason that it really comes down to obviously doing some due diligence around the different applications that you choose to obviously interact with. And for us, one of the best measurements of risk analysis really on these different projects is how long they have been operational for. I think that's becoming a real valuable piece that you would ascribe to any project that's been around for 2 or 3 years. So you talk about Uniswap, Aave, Compound, Balancer, MakerDAO. These are some of the leaders in the space that have been around since the beginning and have shown that they are solid in what they've put together. Because there are going to be armies of people out to exploit any small hack that you've got, right? There's billions of dollars really waiting there on the blockchain that if there is a way to hack it, chances are if you've been around for 3 years, people have tried and they've failed. And that gives you obviously a lot of security when you are dealing with those type of entities that have been around for an extended period of time.
Graham, just while you're on the topic of hacks, there's some exciting news this week where the wormhole hackers were actually reverse hacked, and maybe share a bit about that. That was quite a great story.
You might know more about the story than me, B.
Okay, sorry, my bell is going up, but let me just go on mute for a bit. I'm ding donging. I live next to a Venetian church which dings at 6 o'clock. I'm getting my 6 dongs. But here we go. Is it 6? All right, great. Yeah, so yeah, the wormhole hack was the guys from Jump put I think it was a $10 million bounty out to the guys who could recover the money, and effectively they brought in the best people they could find, and they used the same vulnerability that was used for the wormhole hack to get hold of the value that was stolen, and actually stole it back.
that's That's great. So the thief stole it from the other thief.
Well, yeah, well,
Oh,
jump
The
started
other,
there,
the
and yeah,
other, so the other point in this world is whoever steals best wins.
wow. So we have our last question, and you guys can all jump in whenever you want. How can investors evaluate the long-term potential of different projects and protocols? And what are some of the key metrics, indicators to look for before you make an investment decision? How do we do it, guys?
yeah, I think some of the things I mentioned before about looking at GitHub, looking at transactions, looking at users, looking at the common sense use case of what a project does. Does it make sense? These are important features. We also look at liquidity, tokenomics. Um, yeah, these are the main factors we would look at. Graham, do you want to maybe add more color to what I'm saying?
Yeah, sure. So, I mean, fundamental analysis, first and foremost, of the various projects, what they're going to offer, who's the team behind them, what kind of take up do they have of their specific project. Um, that comes first, right? Um, but in addition to that, especially in the digital asset market, sitting where we are right now, is that market sentiment and the market cycle plays an incredibly important role in a project's valuation, right? So, and this is the argument that we have sometimes internally with our investment committee around the fundamental merits of a project versus the current market sentiment. Okay, and we've seen, like last year was a great example. You could be holding the best fundamental project with the best long-term outlook for adoption, for utility, etc., but you still would have taken a bath, right? So there's clearly a lot of value in assessing where we are in the market cycle, how is market sentiment positioned, and then choosing your entry and exit points accordingly. So, for us, most of these projects that we're talking about are under what we would call the big altcoin category. And within Spectrum, we only want to be allocated to altcoins at specific times in the market cycle when market sentiment is supportive, right? So that's just the nature right now because they are so volatile. So yes, we want to be involved in good fundamental projects, but at the same time, I don't really want to be participating when a good fundamental project has an 85%, 90% drawdown. And right now, where the market is, given its immaturity, that's where we are at. So I think, how are we looking to position ourselves right now? We think that we are potentially close to the bottom of the current market cycle. And now is really the time where we're starting to get excited about looking to allocate to some of these projects because these are going to be your top performing projects during the course of the next bull market cycle. Does this mean that it's something I necessarily want to hold for 5 years or 10 years? Probably not, right? I really want to hold it now while it's cheap and then potentially sell it when it's expensive at the top of the next bull market in a perfect scenario. Again, we're never going to pick the perfect top, but that would be my stance towards an allocation to these type of projects. Maybe there's a couple unicorns in there that you have a specific soft spot for that you say, well, I'm going to buy and hold this and leave it for the next 10 years and hope for the best. There's an argument for that, but that's how we're looking to manage our position within Spectrum, where there are times where we actually want to hold zero in the altcoin category or DeFi category, not because we don't believe in the technology, not because they're not good projects, but just because the market sentiment and market cycle elements are so strong within the industry right now.
Well, I'd like to add to that in closing. So, your question, Larry, was how does one evaluate and make a decision, and who do you back, and what projects should you go into? So, if we can just come back a step or a layer from that, we as a company with our family of funds, touch wood, given the challenges the sector and the industry has faced of late, we haven't been hacked. Our management of counterparty risk has been exceptional, and all the reasons that Graham and Bilal have listed is a credit to how we deep dive in our due diligence and manage that risk. So it's all these, no matter what new technology is born or used as we go forward, those challenges and risks are always going to be there. It's how you manage them and how the team goes about their business that counts.
So, in closing, just 2 words or 2 names. What is right this minute our favorite DeFi project and our least favorite wouldn't touch it? 2 names.
Well, I'll start us off here. So, look, the one DeFi project that we really like is GMX. So, Bilal mentioned that earlier. That's a decentralized exchange that offers various derivative type of contracts. So, you can essentially trade in the DeFi space with leverage, which I think is a very exciting proposition and it's getting great traction. On the wouldn't touch list, let me think. Okay, come
Mine
back to me.
is don't touch the Bored Ape NFT.
Nice one. Nice one.
Stay away from FTX tokens.
Yeah,
Yeah,
maybe
yeah,
I'll
that's
go for that one. I wouldn't touch Solana. I wouldn't touch Solana at this stage, no matter how much it might rally on some of the bounces. I don't hold it in very high regard. I don't think it's got a decent long-term outlook, given its contamination with FTX and its history there. So that's something I'd keep out of my portfolio.
Yeah. Well, my topic is again GMX. I mean, I think we love GMX in our team, and also not so keen on Solana with the FTX backing not there. But I'd say just to be different on the downside, I'd stay away from Maple Finance, which has done quite had a bit of a crash recently, just because. I mean, we'll be looking at funding business where they've got no skin in the game, and yeah, it's a credit business which actually should be well regulated, and there just isn't enough transparency into what's going on in terms of the credit risk policies for my liking.
All right, guys. Well, appreciate the time today. I think we shared some good stuff, and really excited about the future and where we're headed. So
Thanks.
we'll look forward to seeing everybody next time.
Excellent.
Cheers,
Thanks,
guys.
Harry.
Take care.